SHIB is trying to recover, but the 200-day moving average is still overhead. That resistance zone matters because many holders may use it to exit losing positions. Shiba Inu Faces is the search lens here because memecoin recoveries depend heavily on liquidity, volume, and supply sitting above current price. The tension is a rebound from lows is not the same as a confirmed trend reversal. The confirmed details describe SHIB gaining close to 30% since February while still trading far below earlier highs. The first separation is the confirmed event from the market reaction around it. The confirmed setup is a short-term recovery inside a broader weak trend. SHIB was described at 0.00006258, with nearby resistance around 0.000065 and a larger test near 0.000076. The 0.000076 zone lines up with the 200-day moving average. The baseline changes the story because the recovery still has to clear a widely watched trend barrier. It also shows why the open question is whether buyers can break resistance with volume. Must be kept separate from the confirmed baseline. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is overhead supply meeting technical resistance. In plain English, holders who bought higher may sell when price returns near their entry, creating pressure around resistance. Shiba Inu Faces depends on this mechanism because buyers need volume to absorb that supply and prove the breakout. Without that volume, a move into resistance can fade quickly. This mechanism is the bridge between the headline and the practical consequence. The impact falls on SHIB traders, memecoin holders, and liquidity providers. Short-term bulls want to break toward 0.000072 and 0.000008, while bears watch for failure below support. A drop under 0.000058 would weaken the recovery structure support near 0.000005 has attracted buyers before, making it the lower defense zone. The important limit is that the effect should stay tied to the affected group instead of becoming a broad claim about all of crypto. The confirmed part is stabilization from the lows. What remains unclear is whether the move has enough demand to pass the 200-day zone. A decisive close above resistance with stronger volume would clarify bullish follow-through. The gap matters because stabilization does not prove a new uptrend. The same level can become a breakout point or a supply wall depending on volume. Until that proof appears, the safest reading is to keep the unresolved point visibly separate. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal is how SHIB reacts at 0.000065 and then 0.000076. Those levels separate a range bounce from a stronger recovery attempt. Shiba Inu Faces will look different if buyers clear resistance with volume. If 0.000058 fails, the recovery attempt can reset back toward lower support. The useful read is level-by-level confirmation, not a prediction. The close is practical. Track the named signal before treating the story as resolved.